What's going on, guys? Philip at Trade Genius. All right, in this video, I want to talk about the minor capitulation. We're going to go over the capitulation chart, kind of take a look at where this is at currently. And then we're going to talk about how when the halving happens and the output gets cut down, miners are going to be making half as much money as they were the day before halving. So there's a concern that if the miners pull off the network, the network hash rate dies down. But we're going to go over historically what's happened so that you understand that when the halvings occur, what to expect. So let's dive into this video and check it out.
Trade Genius.
Okay, guys, so we've covered this in a previous video a couple of weeks ago, minor capitulation, and you can check this out yourself if you get the hash ribbons indicator from TradingView. But you'll notice that what it is basically two moving averages of the hash power of the network. And when miners take machines offline, the hash power drops. And we'll go over some graphs here in a second. And as that happens, the quicker, faster moving average will cross down below the slower moving average. So this is very typical of a moving average crossover that you'll see us use or refer to in our price charts. But this is applied to the hashing power of the network. So when they cross over like that, we call that an inversion. And then essentially this indicator highlights when that happens and lets you know that there is minor capitulation in effect. And typically what happens when we have minor capitulation is that is in concert with declining price. On the upside, when this comes out of this state and gets back to a normal state where the faster moving average of hashing power is rising above the slower moving average of hashing power. Typically that marks an end to the pullback. The bottom is in for that period of minor capitulation, and we're back off to making higher highs and higher lows. And the last time we did this was back at the end of our bear market. This was a very long capitulation phase. We went from October 2018 to about January 2019. So over 3 months of capitulation. And then what we look for is once these cross back over, you get this green indicator fire, and that's usually you're all clear to get back into the water. And this phase here, because we're heading toward the halving, again, I think it's going to be more along the lines of what we saw back here in the end of 2016. Now this red line is the halving event, and you'll notice that there's capitulation after the halving event. And that makes sense for a time because, again, you're making half as much as you were literally the day before. And the day that halving comes, it's instantly cut in half because the reward mechanism built into Bitcoin is half of what it was the day before as of that halving date. The halving dates are controlled by the block heights. So it's scheduled into the system. Currently at the rate that we're going, it's every 4 years. We reach those predetermined block heights, and then the halving reward gets cut in half. So capitulation is to be expected after the halvings. But I think because of where we are with halving approaching, typically price rises into halving. People are anticipating price to go up after the halving, and you get that sort of market mentality. This halving in 2016 was about a month long. So I think we're in a similar situation there. And then we'll see probably another capitulation after the halving. Now, if you're wondering if after the halving, miners just aren't making money and they pull all this power off the network and that affects the network security, how does that play into this? Well, one thing you need to look at is what happens when power comes off the network, the hash power comes off the network. You have to look at things in context. So first of all, after every halving, which are these red lines, price goes up. Okay, you may have a period where it takes a break, either cools off into the halving or cools off after the halving. But after the halvings, there's always a huge price run. Okay, and I don't think it's going to be any different this time around. It's just simple market mechanics, rising demand into lowering supply output. So Bitcoin is a disinflationary commodity. Okay, that reduces output over time. Very powerful market forces in play there, especially when you have something that is in demand as Bitcoin is. So as price cools off at the halvings, right? So this is the concern. What happens to the hash rate? So if we take and we drag, this is another indicator that you guys can take a look at. It's the hash rate, BTC hash rate. It's freely available for TradingView. Drag this up here. And let's make this bigger. And you'll notice that if we go and we look at hash around the halvings, you'll see a drop off, right? So there's a drop off around the halvings. Now, when this happens, what happens is difficulty drops as well. And when difficulty drops, that means it's easier to mine a block on the Bitcoin blockchain. So what happens is, even though a hash rate drops, the difficulty will then drop. And so it gets to a point where there's an equilibrium between difficulty and price, and the miners will start putting machines back on the network. So it's a self-policing system, okay? And so you just don't really have to worry about it getting too costly for miners, because now there's only half as much Bitcoin being produced that they're just going to pull their machines offline, because at some point the difficulty is going to drop steeply enough where they are going to be putting machines back online because it's feasible. And so that's just a mechanism that you need to be aware of. That's there. It's a policing mechanism, that the difficulty or how hard it is to solve a block is not a constant, it's a variable, and it adapts to how much hash power is on the network. So pretty well thought out by Satoshi Nakamoto, whether that was an individual or a team, but it helps, regulate the reward system. Again, here's another halving. Hash power does fall off, and again, that's to be expected. But with this happening, this falling off, difficulty also then drops. So here's another indicator. This is Bitcoin difficulty, BTC difficulty, again, freely available for TradingView. But you'll notice after the halving, the difficulty drops off. Okay, so this happens whenever there's a reduction in hash rate. If we look at the next halving, okay, back in 2016, we see a bit of reduction in the hash power here, although this didn't go down for very long. But you'll notice that the difficulty in the network drops. Okay, so it makes it easier to solve Bitcoin. And you'll see these difficulty drops when the hash power reduces. If we look fast forward to today, you'll notice that we've had these drop off in hash power. You've seen the obviously the miner capitulation indicator going along with this, and we've seen a reduction in difficulty, right, dropping off. So miner hash power falls off the network, difficulty reduces, makes it easier, and at some point you get an equilibrium between how difficult it is to solve a Bitcoin block versus price. And historically, this has worked itself out. So we'll keep an eye on this. But again, I think this is going to be more like 2016. I think we'll get the miners coming back online, especially if we resolve out of this pattern here to the upside. Once you get a kick up in price, this usually starts to pull on the miner inversion rather quickly. And again, once we get this inversion to complete, we get this green light indicating that the miners are done essentially capitulating, and they're back to adding more hash power to the network because it's profitable in regards to difficulty and price. Then you're going to probably see this being the final bottom before halving, and a pretty good grind higher into halving. And then just keep in mind, you'll either have a peak before halving or right around halving, but there will be, within a give or take a month before or after halving, you're going to probably see a pullback in price. Again, that's another opportunity to buy the dip, so just keep that in mind. All right, guys, that is it for this video. I hope that helps. If it does, please hit like and subscribe. Really helps us out and helps us keep bringing you these videos. I'll see you on the next one. Take care, guys. Bye-bye.
Trade Genius.